This is Eric Mwathe for the weekend of April 19th, 2014. Let's take a look at how the markets closed on Thursday. We are looking at the Dow, which ended down slightly, about 16 points. Nasdaq was up about 2.3%. S&P 500 was almost unchanged. Gold was down about 0.74. And we see that the VIX was down 5 to 6%. Now, if we take a look for the week, the Nasdaq ended the week up 2.39, bringing it back above the 50 level. Hence, it had a nice move, and that's what we were almost expecting at the beginning of last week. If we take a look at the Dow was up about 2.3 also, had a nice bounce. And if we take a look at the S&P 500 for the week, was down 2.7. And so let's take a look at how the charts look like here so we can see what the new week might bring. So let's begin by taking a look at the Nasdaq Weekly, and we can see that we talked about the possibility of this lows line holding, and that connects this low here, April of 2011, this low here, late 2012, draw a straight line, and you can see that this is where the market was at the end of about a week ago. So coming into last week, you see that we held that level, which is where you expect a bounce. And again, just to repeat here, we moved back above the 50 level, which is just an indication of bounce. Last time we bounced back above 50, you can see was here, which was the beginning of 2013, and we had a nice run. We did that, bounced back above 50 here, which is this level here, and we had a nice bounce for a couple of weeks, couple of months. So that's how the market is looking. It's not really out of trouble yet, because let's say, for example, if we eventually break this line here down the road a couple of weeks in the future, that would be a material breach. But right now we are bouncing off that line, which is encouraging if you're a bull. If you take a look at the Nasdaq Daily, we touched the 200-day moving average here and seems to have held, and also there was a trend line support at that level right there. So everything really just played out perfectly in terms of a bounce, and so we'll see what happens. Now that we got the bounce, it's hard to tell what the next move is gonna be. Maybe sideways, maybe down, maybe up, who knows. But if we take a look at the Nasdaq Daily, this level here is playing out precisely the way we were discussed at the end of during last week's video, because you can see now we have uniform activity throughout this. It seems like a W here, up down up down up down, double bottom. So to me that could be a reason for the market to continue pushing higher. We'll see, but it does need to stay above that line, which has been very successful in holding the market high. You can see previously it's been very successful in finding lows in the market. So unless this trend is broken, we can assume that as of right now it is doing the same thing, finding a place to bounce, and so anything above this line here is just confirmation of strength. Now if we go to the hourlies, we start seeing some short-term problems here on the charts. So this is the Nasdaq hourly, and you can see that the top side has now confirmed resistance into late Thursday's trading right there. So on the hourly we are seeing signs of exhaustion. So this one can assume that eventually this needs to pull back. The magnitude of the pullback is hard to discern as of right now. We also have to be very cautious here, because even though right now we are seeing resistance being confirmed, we should also be careful in case the market breaks out of that level. A breakout would actually be a very strong indication of momentum to the upside. Right now it looks like momentum is looking to go, or at least change to and start moving lower. If you take a look at the Nasdaq 30-minute chart, again we see that if we take the break, which was this break here, which happens to be this level here, so this break line there, we draw a straight line from there like that, and you can see this has been successful previously in telling us a short-term high, perfect place to go short. And you see that now we are forming what seems like a triple top on the 30-minute chart here, suggesting that this level here could be an area of resistance, and more than likely we see a pullback. So that's the situation there, unless the market can figure out a way to break out, then that would be a material change in the direction, and which would be bullish. For now, it looks like it wants to go lower on an hourly chart. Actually, before I go to the Dow, let me show you the Nasdaq. Let's take a look at the Nasdaq monthly, because I believe the Nasdaq monthly has some information here, and you can see that now we are back above 69.10 on the Nasdaq, which is just a sign of strength. As long as it's holding above 69.10 on the monthly, that is showing momentum, is still bullish, and that's the way I'm looking at it. Anything back below 69.10 could be serious break, and the reason why I say that is just to remind you again of the last couple of years, going back to 2000 even. Every time we moved below 69.10, we had a major bear market. We moved below 69.10 here in 2007, late 2007, which was here. So if we break below 69.10 and break this trend line, then the market could be open for a big sell-off, actually a big bear market. Let's take a look at the Dow Weekly. And the Dow Weekly, what's interesting here is the Dow is now about 70 points away from breaking out. The breakout level is going to be this weekly closing high here in late 2013, and it is 16,478 is the highest weekly closing high. So all the Dow needs to do is just add 70 points, and we are going to be looking at a weekly breakout, and that's unbelievable given the last couple of weeks the way we've been trading. So the Dow is not too far off from breaking out. As far as the holding this week up 2% is because this line held, the line we talked about last week held. So we find support precisely on that line. And so yes, it is very possible for the market to move high. Now we have to be careful, because if we break that trend line now, we're in a serious sell-off period. But as of right now, we are bouncing, so we have to play the bounce. If we take a look at the Dow Daily, this level here seems to have held. So it's just this level here, which was a previous daily closing high here, and so that seems to have held. We've held above the 50-day moving average, and so maybe we're going to be sideways for now, but it seems healthy, just the fact that we're above the 50-day moving average, and we'll see what happens. And also we see that on the daily, this is where we were expecting support, this level here, and you can see we bounced off this support perfectly. And this has been doing very good, giving us good indications of a bounce in the market. Every time we've bounced off this level, we've had this market bounce. And in fact, going back to beginning of or late 2012 is when this has been holding the market together. So we bounced off that level again, so one can assume that the market is still healthy. Now if you go to the 60-minute chart for the Dow, you see problems here. You see that the top side RSI is showing resistance just like the Nasdaq, so that's a problem there. That suggests that on the hourly we might see a pullback unless we can break out. If we break out, that's a very strong momentum changing situation there. So a breakout will be good for the bulls. Right now it looks like it's setting up to go lower. If we take a look at the Dow 30-minute chart, and we can see that seems to be some kind of a trend here, and just this line here for some reason was almost resistance here. We broke out here, moved higher. Ever since we've moved below this line, this has become resistance of the last couple of days here. So maybe there's resistance here also. Top side of the RSI on the 30-minute chart for the Dow, you can see that it's been finding it difficult to move above that level there. Most recent sell-off came from here, which was this level here, found resistance here, which was this high, and so now we are finding resistance here, suggesting this could also be a high short term in the market. Now the Dow, let's take a look at the Dow Transports. What's interesting about the Dow Transports is they are now trading at all-time weekly closing highs. That is hard to believe, but it's true. It's holding above 7592.36, so this is a fresh weekly closing high. So the Dow Transports, surprise, surprise, are at breakout levels. How that happened is hard to tell, but yeah, we found support on this trend line about a week ago, and so that's why this sharp reversal here. And so if it can hold above 75.92, that's very bullish actually. And you can see here we talked about this line could offer support, and we found the support right there. So we need to see what's going to happen here. Again, a breakout, staying above that breakout level is going to be a strong indication of where the market is looking to go. If we take a look at the daily, what I want to point out here is we found support on this line here, just precisely as we discussed there, and also we found support on this declining topside line right there. So this was an area of confluence, and not surprisingly, we bounced off that level. We also held this trend line here on the daily, so everything was coming into play, and that also happened to be an area around the 50-day moving average. So it makes sense that we bounced off that level and now closing at fresh weekly closing highs. Now if you take a look at the Dow Transports on a monthly chart, you can see that it is still holding at 76 on the monthly. That's very strong because anything above 69.10. So this is just a sign of strength. As long as it's holding above 69.10, it continues pushing high, and that's just how the technicals work on that one. Now if we take a look at the S&P 500, you can see that coming into the last week here, we were very close to breaking that trend line there, and you can see it's bounced back above it, which is a sign of a strong market. And we also found support back above the 10-week moving average here. Now the S&P 500 needs to break out above 1878.04 for it to be a true breakout. It needs to be above this level here for it to be a weekly breakout. Right now we are trading slightly below that level, but not too far off. So 1878.04 was the previous highest weekly closing high that the S&P 500 needs to break out and hold above if the bulls are really going to stay in charge. Now, just like the Nasdaq and the Dow, you can see on the hourly for the S&P 500, we are again contending with resistance at this top side of the RSI. That could be a sign for a pullback early for the beginning of the new week. We'll see. Otherwise, we might get a breakout, which would be very strong. Right now, we are looking at a resistance, and this is just consistent in most of the charts. Now, let's take a look at the VIX here. And you can see that the VIX daily, and we talked about this, the fact that the VIX was going to find it difficult to hold above this level here. Right, we talked about that, and so that just perfectly was a nice time to get back in the market, because once we hit that level, we were expecting resistance, and we got resistance. And if you take a look at this, there's a top side resistance on the VIX daily, which held. And so the VIX was actually looking a little bit bearish coming into the beginning of the last week. And also the VIX weekly was telling us signs of potential resistance, because on the top side of the VIX weekly, and this is almost a 3-year weekly chart, if you draw it like that, you see that we had hit the top side of the RSI there. And also we had hit the top side of the price resistance. So on the weekly, this just makes sense that we pull back in the VIX and that the market was a buy. Now, take a look at the VIX hourly. And what we see here is the reason why I thought the market would have a bounce to the upside is because this red line has been very good at telling us when the VIX is making a high. You can see even recently we had this high here, which was this high. We hit that line there and back below it, that high, in fact going back here, and even this high here came when we made that move back below that line. So you can see that over the last beginning of this past week, once we went above that line and went below it, beginning of the week, it was time to get back in the market. So we'll see whether now it's time to get back short if you're a day trader, because you can see that now we are finding support on the low side of the VIX. So it would make sense that it works its way higher given that hourly chart, and also given that the markets are showing us hourly chart resistance. Now let's take a look at Apple here, and I always talk about this one here, and you can see we are still trading in this wedge, so there's really no need to be making strong bets here. We still continue trading in that wedge, and the wedge can also be drawn something like that even on the weekly RSI. So we are trading on a wedge in the price here and a wedge here on the on the weekly, and you can see very clearly on the daily that this is true because there's a wedge here and there's also another wedge down, so somewhere around here. I would draw the wedge like that, just until it decides which way it wants to go. There's really no need to make a strong bet. And also you can see that there's another wedge on the like that, and you can see over the last couple of days we've held this bottom side of the wedge, so it continues trading in the wedge, also on the RSI wedge. So eventually it's going to break out or break down, so I don't believe there's a reason to really force the issue on this one. So that concludes the free part of this video. Eric Mwathe. Enjoy your weekend. The rest is for subscribers.